Okay, so you walk into a dealership, you see a $25,000 car, and you think, all right, that's reasonable, that's doable. You put a little down, finance the rest, the salesperson is friendly, the monthly payment sounds fine, and you drive off that lot feeling genuinely proud of yourself. Here's the thing though, that $25,000 car, by the time you're actually done paying for it, interest, fees, insurance, depreciation, you didn't spend $25,000. You spent closer to $41,000. And every single dollar of that was completely legal, totally standard, and nobody in that showroom mentioned it once. Once you see this math, it changes how you walk into every dealership for the rest of your life. What's up, guys? My name is Ricky. I grew up watching my family make car payments for basically my entire childhood. And the thing that always got me, nobody ever asked what the total actually costs. Just, can we afford the monthly payment? That question followed me into adulthood. I started digging, I found the answer. And honestly, it's worse than most people think. That's what this channel is about. Subscribe, and let's get into it. Look, nobody taught us how car buying actually works. Not in school, not at home. Nobody said, here's what a 5-year loan really costs you. Here's how dealers make money on your financing. Here's why the monthly payment question is not as innocent as it sounds. So we figure it out ourselves, usually the hard way. You know exactly how this goes. You need a car. Maybe your old one finally died. Maybe you just started a new job and need something reliable. You find one online, $25,000, clean, good mileage, looks solid. So you go in. The showroom is bright, the car smells incredible, the salesperson brings you coffee, they always bring you coffee, and everything just feels comfortable. Then they ask one question. How much can you comfortably afford per month? That question sounds helpful, like they're watching your budget. But what it's actually doing is moving your focus away from the total price toward a number small enough that your brain just says yes. $500 a month sounds like nothing, but $500 over 60 months, that's $30,000 before interest, before fees, before anything. Most people don't run that math in the showroom because the car is right there. It's real. It smells incredible. And your emotions are running the whole show. The system is designed this way. The lighting, the layout, the language, all of it optimized to make you comfortable spending more than you planned. And most people don't realize it happened until they're 2 years into the loan. They check their balance and think, wait, why do I still owe so much? That feeling is more common than anyone talks about. Here's the belief most people carry into a dealership. If I can afford the monthly payment, I can afford the car. That logic feels solid on the surface, but it's exactly what costs people thousands of extra dollars. Because affording a payment and affording a car are two completely different things. Let me show you something that'll make you never look at a monthly payment the same way. Same $25,000 car, 2 buyers. Buyer 1 puts $5,000 down, finances $20,000 at 7% over 60 months. Payment, $396 a month. Buyer 2 puts nothing down, finances the full $25,000 at 9% over 72 months. Payment, $391 a month. Buyer 2 has the lower payment, no money up front, looks like the better deal. But Buyer 1 pays $3,700 in total interest. Buyer 2 pays over $6,200. That's $2,500 more just from stretching the loan and skipping the down payment. Now here's what most people don't realize. The dealership often makes money on that interest too, through something called dealer reserve. When they arrange your financing, they sometimes mark up the rate from what the bank actually offered, and they keep that difference. So that friendly, we'll handle the financing offer? That's not a favor, that's a revenue stream. Once you see that, you can't unsee it. All right, let's build this $41,000 from scratch. Start with the sticker, $25,000. Add dealer fees, Documentation, title, registration, about $1,200. Money you paid just to do the paperwork. Sales tax at 7%, another $1,750. You haven't made a single payment yet, and you're already at $27,950. Finance it. $2,000 down, $25,950 at 7% over 60 months. Total payments, $30,780. That's $4,830 in interest alone, a vacation you handed to a bank. Add insurance. Most lenders require full coverage on a car financed. If you were on liability only before, that bump runs about $600 extra a year. Over 5 years, $3,000, just because you have a loan. We're sitting at around $35,780 in real money out of your pocket. But none of that is what actually breaks the math. That's depreciation. And this is the one I really want you to feel. Your $25,000 car loses roughly 20% of its value the moment you drive it off the lot. Think about that. You woke up Tuesday morning, you drove to the dealership, you signed some papers, and by the time you pulled into your driveway, you were already $5,000 poorer. Not because you did anything wrong, not because you got scammed, just because you bought the car. By year 5, when you finally pay it off, that car is worth about $12,500. You paid over $22,000. You have an asset worth $12,500. That $22,000 gap, that's the real price of the car, and it never appears on the window sticker. Add $3,500 in maintenance, and you land right at $41,000. Not clickbait, just math nobody walks you through. So here's the thing about that depreciation number. It doesn't feel real until you see it happen to an actual person. So let me show you 2 people. Same income, one decision, completely different outcomes. Marcus is 26. New job, first real paycheck. He's been driving a beat-up 2010 Honda for 3 years and he is done. He finds a 2023 SUV, $27,000. Salesperson runs his credit, comes back at 8.9%. Stretches the loan to 72 months to get the payment to $420. Marcus thinks, $420, I make good money now, that's nothing. Over 6 years, Marcus pays $30,240 in payments, $6,800 in interest, $1,400 in fees and tax. Insurance bump adds $3,000. Marcus spent close to $42,000 on a car worth $11,000 at payoff. Here's the part that really gets me. Marcus never felt broke. Payments were fine, life went on. But $42,000 quietly left his life, and he has almost nothing to show for it financially. Now meet Jordan. Same age, same income. Jordan buys a used 2019 version of the same type of car for $16,000, puts $3,000 down, finances $13,000 at 6.5% over 48 months. Payment, $308. Total interest, $1,800. Car's worth $9,000 at payoff. And compared to Marcus, Jordan is pocketing $112 every single month. Over 48 months, that's $5,376 back in Jordan's life. Same income, one decision. And here's where it can get even worse. 3 years into your loan, you owe $14,000. Car is worth $11,000. That's called being underwater. Transmission goes. Repair is $3,800. You can't sell, you owe more than it's worth. Trade it in and you roll that negative equity into your next loan. That's exactly how people end up with $35,000 loans on $22,000 cars. It's a cycle, and it always starts with a payment that felt totally fine. The dealership profits more in this situation. Bigger loan, more interest, more dealer reserve. You're not a customer at that point. You're a revenue stream. Okay, I want to stop here for a second, because some of you already bought the car. You're in the loan right now, and you're thinking, great, Ricky, what do I do now? Here's what's actually actionable. If your credit score has improved since you bought, and for most people it does just from making payments on time, you might qualify to refinance at a lower rate. Dropping from 9% to 6% on a $20,000 balance saves you over $1,800 in interest from one phone call. Credit unions almost always offer lower rates than dealerships because they're not for profit. Average credit union auto rates run 1 to 2 points lower than dealer-arranged financing. On a $20,000 loan, that's $1,000 to $2,500 back in your pocket. And here's the move most people don't know they're allowed to make. Get pre-approved before you walk into any dealership. Your bank, your credit union, walk in with that letter in your hand. Now the dealer has to beat your rate to earn your business. Suddenly you're running that conversation. That one move alone saves the average buyer $2,000 to $3,000 before you've even talked about the price of the car. Here's the bigger picture, and this is what I actually want you to sit with. A car loses value every single day you own it. And when you take on a 6-year loan for something depreciating, you're paying tomorrow's money for something worth less every morning you wake up. That's a strange deal when you say it out loud. The quietly wealthy people I've studied, not celebrities, just regular people who built real financial stability, they treat cars as tools, not rewards, not status, just transportation. They buy reliable, they buy used when it makes sense, they pay it off fast, and then they redirect that payment towards something that actually grows. Drive a paid-off $12,000 car instead of financing a $27,000 one. Put $300 a month into an index fund during those same 3 years. At 7% average return, that's roughly $11,500 in investments. And that money keeps growing. It works while you sleep. Meanwhile, Marcus is still making payments. The car you drive doesn't build wealth. The decision of how you buy it does. All right, let's land this. We started with a $25,000 car and showed how the total economic cost lands closer to $41,000. Not because anyone tricked you, just because nobody showed you the full picture. Here's what I want you to carry out of this video. Calculate the total cost of the loan, not the monthly payment. Multiply payment times months. That number is what you're actually agreeing to. Get pre-approved before you walk in. It shifts the entire conversation in your favor. Shorter loan terms cost more monthly but save you significantly overall. Pay more now, pay far less total. Factor in depreciation before you buy. Ask yourself, what will this car be worth when it's paid off? Because that gap between what you paid and what you have is the real price of ownership. And the last one, stop making the biggest financial decisions of your life inside a brightly lit showroom while someone brings you coffee and your emotions are running at a 10. Run the numbers at home. Sleep on it. Come back the next day. The deal will still be there. And if it isn't, well, that's actually useful information about whether it was ever a real deal. Look, if this video made you think differently about even one part of how you buy a car, that's genuinely the whole point. Maybe you're about to buy. Maybe you're already in a loan. Maybe you clicked because $41,000 sounded insane. All valid. If this helped, hit like. It gets this in front of people who actually need it. Subscribe if you want more of this. Real numbers, real decisions, no fluff. Drop a comment below. Tell me what car decision you're sitting on right now, or what you wish someone had told you before your last purchase. I read every single one. All right, take care of yourself, and I'll see you in the next one.